Oh, hello and welcome everyone to another episode of Tax Smart Cafe's Espresso. How are you, Rom?
I'm good and excited. Hello to all of our viewers. So, if you are new to this channel, you will learn a lot about taxes and or superannuation. So, musta?
Mabuti, definitely, Rom. I'm excited as well. You know why?
Mhm.
Because we have actually we've been doing tax returns, right? So we have a client, a couple, and they came to us to do their tax returns. They have a specific scenario, and that's what we're going to discuss today. Okay.
Mhm.
So their story is that the couple, so Simon and Jane, they bought land last year, January of last year, with the intention to build a house for rental property. You want that for rental property. Come by October, it's actually ready. By October, construction is nearing completion. So they want to actually advertise it for tenant because they know it's going to be ready very soon. So by around after a month, by 30th of November last year, so they finally got that certificate of occupancy from the builder. So meaning that yeah, the tenant can now occupy the rental property. So Simon and Jane came to us for when doing their tax returns. They came with all their documents. They came with the receipts for land tax, for borrowing costs, interests for their loan, as well as council rates. So now their question is, can they actually claim all of those expenses as deductions um, during their, I guess, for up to 30th of June this year, June 30, 2021?
Okay. Before answering that question, Simon and Jane, congratulations for having an investment property. It's a good strategy for wealth creation. We are big on that, Joy, di ba? So, we encourage our client to buy investment property as a part of wealth creation to reduce tax. So the part of tax minimization. So to answer that question, there's actually a new law for vacant land that took effect 2019 to limit deductions for holding a vacant land. So the first question is, what is vacant land? So vacant
Mm.
land are those land that did not contain a substantial or a permanent structure, or it contains a permanent structure that refers to residential property but not yet lawfully occupied, or not rented out, or not genuinely available for rent. So, in the case of Simon and Jane, so they bought a land January 2020, and then got a certificate of occupancy October, I think that's October 31, 20,
November.
November 30, 2020. So,
Yeah.
the expenses for holding a vacant land, which is from January up to the acceptance of certificate of occupancy, cannot be deducted because that is considered as a vacant land. But of course, November up to June 30, 2020, and they can claim of those expenses that you mentioned, the cost of holding a vacant land. Example, the borrowing costs, you mentioned about that, interest expense, lands, council rates. So meaning it will be prorated. So from, of course, January to June 30, 2020, they cannot claim that. June up to November 30, they cannot claim that as well. So November 30 up to June 2021, they can claim it. Meaning it will be prorated.
Mm. Even though they actually advertise for tenants in October.
So advertisement expense that will not be considered as holding a vacant land. So the advertisement expense can be deducted in full.
Mm.
But there's a good news, actually a good news, because we have a capital gains tax law as well. So those expenses that I mentioned that cannot be claimed when the property is vacant, they can actually add that to a cost base that can be used for the calculation of the capital gains tax. So they will not
Sounds good.
lose those expenses. Yeah.
Definitely. So it's still not a loss, right? So their holding cost before their property is genuinely available for rent. That portion of that, they can actually add that to the cost base eventually when they're going to sell it to reduce their capital gains tax. But then the ones after any expenses they have after it's genuinely available for rent will be the ones that can be deducted in their income tax return.
Correct.
Sounds good. Okay. So, Rob, any advice, any tips now for couples like Simon and Jane who have investment rental properties?
So Simon and Jane and those property investors who hold a vacant land that failed to claim those expenses, that accountants told them that you cannot claim this, keep those invoices because you will use that by the time you sell your property. So keep those expenses, and of course, you always consult your accountant every time you lodge your tax return and to get an advice for tax purposes.
Definitely. Okay. Thanks for that, Rob. I guess we wrap it there. Cool. As we always say,
So save taxes legally and be smart with
with
Tax
Smart
Smart Cafe.
Cafe. Thank
Thank
you.
you. Thank you. Bye bye. Bye bye. Bye bye.
Bye.